Hello, everybody. Good day. Today is June 13th. Wanted to show you this one video regarding a few things here. This is a non-US correlated portfolio because I'm just assuming when the US goes through the most extreme uh, economic conditions that maybe you don't want to trade anything related to US. Also, what I want to show, we really need to do backtesting with these kind of simulators that again can be generated by AI. So hopefully you know my process. But even if you don't, what I want you to take away from this summary Word document is we are looking at prioritizing non-USA co-related assets. These can be with a portfolio allocation weighting and medium frequency trading strategies for $100,000 portfolio. So what comes in here? We have here Swiss franc, cocoa, Canadian, Brent crude oil, Bitcoin, well, reference rate, Australian dollar, and aluminum. Okay. So in here, one of the other things we want is non-correlated and maybe just maybe low uh, volatile as well. So here we have cocoa set at 51% annual volatility, and also the same with uh, Bitcoin as well. In here, it will give you a mixture of what to go with, what to expect, and there's going to be negative in here as well. So let me show you the portfolio simulation here. So in this case, I asked for instruments can be applicable or not as part of the mix of 14-day analysis as of today, actually. So this is using option forward-looking data in real option chain data on top of uh, past future prices as well. So in here, what you may want to look at is very important to remember is you have $102 that would be expected with a 0.73 percent profit over the next 14 days. Okay, so that doesn't sound like a lot. But what I want to show you is, I'm going to just show you what we have here. So we have a strategy overview here. So let's just say, and this is all generated by AI again, where we have, let's say, Brent Crude allocate 67%, cash futures arbitrage, allocate 33% to puts, and hold for a week. Okay, so our expected return would be $414 there. And again, we can play around with this somewhat. Let's see if we had the Australian dollar, same type of a strategy with a payoff diagram, believe it or not, we can achieve a whole whopping 30 cents. And again, with Swiss franc, we have here a combination of what to do here. Expected payoff at $327. All right, so now that we know where we can put most of our focus on, in this case, we have Brent crude, Australian dollar, Swiss franc, and the Canadian dollar clicked. If we add in aluminum, Bitcoin, and cocoa, I'll show you what happens. So right now, is we have a portfolio allocation, as you can see here. Here's our adjusted allocation after the 14-day period with the amounts. And here we have our trading simulation. Okay, we have all different types. And here we can see our different price lines are projected over the next 14 days from June 15th, let's say, to the end of January 27th. Again, all AI. So here we have a P&L analysis. Okay. So again, this is among the the four assets here. There's the um, potential trades along with the close positions as well. You can see this is all projected among a mix of when it would be traded, for bit, for sorry, oil, for Australian dollar, Swiss franc, and the Canadian dollar. All right, so that we know that, so let's do our uh, performance analysis. So here we're expecting over the next 14 days $102. Okay. So here's a win ratio of 44%. So I guess this is probably what it's seeing in the past data, no different than back testing. Um, it's projecting that the markets might go into decline. You can see here we only have a win ratio of 44%, average win at $12, average loss at $6. So we got 22 trades winning, 27 trades losing. So the question becomes then, when you start to look at all of these available assets, what's the most profitable asset to hold? Okay, so in this case, with this portfolio, we're losing money over the next 14 days, both with Australia, Swiss franc, and Canadian dollar. Now I'm going to show you, let's say if and remember, the volatility counts. So if I add in aluminum and I rerun let's see if it automatically, I'll have to rerun the simulation. So come back in here. Where do I run the simulation? And again, if you want the code, a lot of people want the code. This will be available through my um, elite programming membership. Be on my list for that if you want to know more about it. So here's where you start the simulation, recalculates it. There you go. So if I added now in aluminum, now I'm only making 451. So this is kind of back testing, but back testing is really not worthy where you need to run a fairly sophisticated um, simulation amongst an entire, suggest in this case, portfolio of non-correlated to the US. We can see here, we're only going to make $4. So how do we lower the risk? Well, I'm going to put in all of these and go in reverse. So now I'll rerun the portfolio and restart it. And strategy overview, portfolio analysis, trading simulation, and I'm going to start it. I'll restart and start simulation. So you'll be able to see what's happening here. Same simulation. Now we've added everything at $383. Again, using back real data and combining with options data over the next 4 to 6 weeks, depending upon the asset. So here, if we go back into the portfolio analysis, you can see here we've radically reduced our win ratio, win ratio. So now if we go back in here, you can see if I take out CC, Coco, and rerun it, change nothing else. Okay. I go back into the simulation, reset, start. Let's see if that improves anything. So, okay. So now we're minimizing our loss. Okay. We're boosting our win ratio. Okay. You can see here the only thing that seems to be profitable in a meaningful way, even these two ones, Australian Swiss franc and Canadian dollar, the losses aren't so bad, but that eats into this profit. So then the question becomes, well, let's say if I only want to focus on, well, let me get rid of these two just to show you. So we can get rid of Bitcoin and the aluminum. So get rid of that and Bitcoin right here and rerun our strategy here and see what happens, just to show you what happens here. So again, we need to, okay, so now things have radically improved. Now we're at $102. So even when I look at our performance analysis, okay, you can see here we're still taking on losses. So the question is, why would I even carry that? If I, assuming, do I go all in and just trade oil? Well, let's see what happens here. So we're already still profiting because of oil and getting rid of these three, call them dogs, being Australian CHF and Canadian dollar. So again, if I go back in here, start the simulation, let's see how much. So now we got a total return of 4.59, just being all in with Brent crude at 25% of the original allocation. So the question is that the way I go? Because it's projected to lose money. You can see here it's not doing kind of nice. And again, this is off of real world market data, real world futures past data, along with future option data as well. So again, not 100%, but um, you can clearly see we're up 600 bucks, 100% win ratio. So the question is, do we take that trade and only trade that, reduce our risk as well, and only trade 25% of what we would originally propose at 14,000, only trade 25% of that, and just trade 100% Brent crude? I don't know. That's something I'd probably consider. And again, we are using past data, but we're not blowing our brains out on simple back testing. We're running a simulation generated by AI to be able to simulate our maximum profit potential moving forward, meaning we're using more effort, more focus on the forward looking data instead of past data as well. And the past data goes back 1 year in the future data. Okay. So I just want to highlight that as a process that you can use that most professional traders will probably use something similar. Also, as you go into my website, quantlabsnet.com, what you'll find here to get on my email list, just jump on my email list to get on a free ebook on C++ and uh, high frequency trading. You can also um, get that by pressing the Learn tab as well. We'll leave that as well. I don't. People want the code. I don't list a membership. It's not cheap. Well, it's kind of affordable. But if you want to know, get on that, and you'll get all my contact info by doing that. Other than that, thanks for watching. Have a good day.